Hey everyone, my name is Daniel and welcome back to the Finance Channel. I hope you're having a great day out there. As always, here today, I want to talk to you all about SmileDirectClub, ticker symbol SDC, and whether or not to buy or sell SmileDirectClub after this massive drop that we've seen in their stock over the past few months, really since the beginning of 2021. The stock has been on a major downtrend, so in this video, we're going to talk about the business, what's been up, what caused this massive drop in stock price, some price targets, and exactly what I'm doing with SmileDirectClub over the coming months and over the coming years. So if you're going to be enjoying this video and potentially end up finding some insight and value, please consider subscribing. And with that out of the way, let's get into the video here. So first and foremost, really important to understand exactly what SmileDirectClub does. Basically a big competitor to something like Invisalign, pretty much a clear aligner for your teeth, an alternative to braces. Now SmileDirectClub, they're really focusing on more of a cost conscious product in that sense, where it's much cheaper than something like Invisalign would be by a multiple of 2, 3, 4x, so significantly cheaper. And although the quality is definitely not the same as something like Invisalign, it gets the job done on small to mid-sized fixes or things that need to fix, whether that be just some teeth that are out of place, things like that. But either way, here's just a quick PDF here, just again showcasing exactly how their actual business model works. First and foremost, you have two options. Either you go to an actual SmileDirectClub shop. They have these all around, Canada, the United States, the different markets that they operate within, where you can get again a 3D image taken of your mouth and whatnot, your teeth. Do it all there, or you can actually have it sent to your home and you get your impressions done yourself. So you, again, bite down on a form of plastic and you actually bite down on a few pieces of, plastic, whatever it is. I'm not a dentist, obviously, so I don't understand this process on a very, very high level, but you do have to bite down on a certain mold. You do that a few times for your top teeth, a few times for your bottom teeth. You send that off. Then a lab technician develops a draft treatment plan using a proprietary software. A state-licensed dentist or orthodontist reviews the smile plan and patient data to determine if the consumer is a good candidate for the treatment. The plan is appropriate, and if more information is needed. Then beyond that, if the patient is approved, so obviously if you're not approved, you got to go to an actual orthodontist, but if you are approved, the dentist presents the final treatment plan through our teledentistry platform and prescribes clear aligners. SDC coordinates the manufacturing and direct shipment of the aligner so treatment can begin. So again, after you're confirmed, SmileDirectClub sends these, whatever the clear aligners to your home, and then during treatment, the treating dentist or orthodontist and SmileDirectClub's professional dental team monitors the patient's progress through regularly via telehealth platform and performs check-ins at least every 60 days with 24/7 care available. SDC customers may contact the doctor or dental team at any time for consultation with more care touch points than a brick and mortar practice. So again, throughout this whole process, you have the opportunity to talk with SmileDirectClub as, again, a company, the dentists that work there, 24/7, again, through their telehealth platform, which is great to see. And then once you're done this process, which normally takes around 2 years, so again, once the treatment is complete, retainers are recommended to maintain the patient's smile for roughly $99. So you get that done once, and then, every once in a while, you do need to, again, buy retainers again, and these are, again, used to maintain that smile. So in a sense, SmileDirectClub has some form of recurring revenue business model where once someone uses SmileDirectClub to fix their teeth, and this is something that is true for Invisalign, even braces, they actually put the metal at the back of your teeth or stick it on to keep your teeth in place. This is something that is very similar with all aligners and obviously is, as I mentioned previously, an aspect of a recurring revenue business model for something like SmileDirectClub because, again, consumers, they get their treatment done, but then every 6 months, every year, they have to get these retainers, which great from a business point of view, at least from this perspective. So again, you just have some statistics here comparing them to traditional clear aligners and traditional braces, saying that it is a very similar process. But at the end of the day, The main goal of SmileDirectClub with what they do is, again, find a cost-effective way to fix someone's teeth. And obviously, if you have some significant problem, go to an orthodontist, potentially, normally if you have a significant problem, you just want traditional braces. But SmileDirectClub, again, focusing on that niche of people who have or want to have their teeth fixed, minor problems from that standpoint. So now that we understand the actual business model of this company, what they do, and again, their goal is just to fix this. That's kind of the goal of the company, or fix people's teeth rather. Let's go through the financials here, see what's been up with the stock, what's been happening with the company, go through some of the financials. By the way, this is Ticker software. I found this a couple days ago, completely free to use. Check out the link in the description down below. I love it for analyzing a stock, a company. Feel free to check it out. But again, looking at SmileDirectClub here, roughly a $2 billion company at this point in time. I'm not sure why it says 600 million here on this screen, but it is roughly a $2 billion company using their fully diluted share outstanding count. But looking at the actual financials of this company, you'll see that they're actually a major growth company. Aside from what we saw back in 2020, again, this business got hit pretty hard during COVID, which is very unfortunate because they went public right at the end of 2019, right before COVID hit. So when you look at the actual performance of their stock over, ever since they went public, it really has been on a major downtrend because the moment they went public, COVID hit the business, revenue stagnated, and obviously investors didn't like that. But either way, it's a very profitable business model. Gross margins at this company sit at right around 70%, and they plan on getting that to right around 80% over the coming years, again, further on their mission to get to positive net income. But a very profitable business from that standpoint, but their operating margins are negative. And you're probably asking, hey, Daniel, why are they losing money? Well, they're spending a ton on marketing, and this is, nothing that they're trying to hide. When we look at the business's growth over the past 4, 5, 6 years, it's been massive. When you look at, percentage revenue growth, the triple digit range, 2016, 17, 18, 19, when it comes to percentage growth year over year. Obviously, 2020 was a bad year, but moving forward, they're planning on shifting from this hyper-growth business model, which caused them to burn significant amounts of capital through, again, advertising, to more of a slower pace, still a growth company, but slower growth, focusing more on profitability to a point where, hey, revenue growth may be anywhere from 20 to 30% on a yearly basis, but because of that, profitability will be much more clearer in the sense of potentially getting there over the coming years. So looking at this business, again, although they are losing money at this point, the plan is that over the next couple of years here, as they transition to, slower growth, more profitability, you will start to see positive net income, which again, when you look at the net income of this company over the past couple of years here, it has been, declining as a loss, which is great to see. But what caused the stock to drop over the past couple of months here? And you can see if you go to, let's say, like a 1 month view, back at the end of July, beginning of August, the stock was trading at around $7, and then bam, August 10th hit, August 9th, 10th hit, and the stock drops right around 25% in one trading day. What happened? Well, SmileDirectClub went ahead and reported their second quarter financial results. And what happened? Well, they reported lower than expected revenues and lower than expected profits, both on that standpoint. And although their long-term guidance wasn't impacted too significantly, investors took this very, very badly, and again, the stock dropped significantly. Now, they kind of pinpointed some of these headwinds to their cyber attack that they had back in April. Thankfully, the company didn't experience any really negative impact from that, fiscally speaking. The lasting economic effects of COVID-19, as we know, that hit their business significantly on our target demographic, and the slower scaling of some of our international markets due to COVID prevented us from achieving our anticipated second quarter results. So again, international growth is a big thing for this company. And, as they mentioned here, slower scaling on that front. So, nothing too concerning from that standpoint. And again, let's just keep going here. Our planned overinvestment in marketing to relaunch in Germany and Spain later this year, combined with continued execution on expanding customer acquisition channels, in particular the professional channel, should help us drive controlled and profitable growth consistent with our long-term targets. So there, when it comes to the long term of this company, not impacted whatsoever by this quarter, all just short-term headwinds with it. Again, COVID-19 significantly impacted them as a business, but moving forward here over the next couple of quarters, once we get past Delta, once people hopefully get vaccinated over time and cases start to go down, lockdowns go down, and obviously with that you have a situation where an economic recovery begins to really shine. SmileDirectClub's business model should improve in a significant way to a point where we're back to revenue growth and back on that track to profitability. So when I look at this quarter, nothing too significant here. They didn't lower their full year guidance. They just said, hey, we think that there's a chance we might not hit $800 million in revenue and might get to only $750 million, which they kind of laid out these different scenarios here based off of, what must happen for them to hit $750 million, what might happen for them to hit $800 million. Either way, this is all just short-term noise. When I look at a company, at an investment, I like to look at it from a 5-year perspective, in this case, looking out to 2025. So when I look at SmileDirectClub, not much has changed, right? And let's just go through my numbers right here, then we'll go through exactly what I'm doing with SmileDirectClub in regards to my overall portfolio. But either way, I did lower revenue for 2021 to roughly $760 million. That is down from the $800 million I had previously. So again, I did that. I like to be conservative with what's happening at the business. But either way, the stock dropped 25%. That's what, like a 5% lowering in revenue expected for 2021. You just kind of look at these different ratios here, but I'm expecting roughly 20% average revenue growth all the way up to 2025. Now, management thinks they can hit anywhere from 20 to 30% up until that time. They said that in their previous conference call, not this last one, but the previous one. So, I'm taking the bottom of that kind of range. I don't think revenue growth is going to be the problem for this company as soon as, again, COVID starts to go away. But then you have EBITDA margins. And again, I'm picking right around 25%. In that same conference call, they said they expect to hit EBITDA margins over the long run with, again, this kind of new plan and new focus of anywhere from 25 to 30%. So at a 25% EBITDA margin, I'm at the bottom layer of that range. And I'm assuming, factoring in some taxes, some interest expenses, a net income margin rather significantly lower than something like Align Technologies, despite having similar gross margins on that front. So again, I'm assuming this company doesn't get to the level of profitability that Align Technologies has, but I am assuming some level of profitability, the lower level of what management thinks. So again, roughly $1.6 billion in revenue, at least through this model expected by 2025. Then you factor in that net income margin, and you get roughly just under $300 million in net income by year 2025. You put on a 20 PE ratio, and you get roughly a 3x in stock price over just the next 4.5 years here. So again, this is assuming more of a conservative scenario. Hey, if revenue growth picks up, international expansion goes a little bit better than anticipated, let's say the valuation of this company jumps to maybe like 22 or 22 price to earnings ratio, their EBITDA margin improves to, let's say, 27.5, you start to see, the potential that this company has and the potential that the stock has as well to really be anywhere from a 3 to potentially a 4x stock over the next 4.5 years, as long as this company executes. Now, again, the only risk I see with this business right now is them not getting to profitability within the next couple of years. Because if they don't, SmileDirectClub does not have the most perfect balance sheet, let's just put it that way. When you look at their balance sheet here, you'll see that they have roughly 376, just under $400 million in, again, total cash and short-term investments, just over $600 million in current assets. But when you look at the debt that this company has, not the short-term debt, but long-term debt, they have a lot more debt than they do have cash, just over $700 million. So although they actually can use a significant amount of this cash to pay off a bunch of this debt, if this company continues operating at a significant loss over the next couple of years, there's a big chance they're either going to have to issue more debt or potentially dilute shareholder value by issuing more shares, which I personally don't want to see. That's something that, again, is something that a lot of people don't pay attention to. If a company issues more shares, your portion of the company decreases rather. So with that, you're paying a larger valuation for the company. So I hope this company manages to get to profitability by the end of maybe 2022, early 2023 is my hope. And with that, obviously, it should come a lot more positivity to the stock, which in my opinion, this is one of the reasons as to why we've seen this decline, not just the fact that, hey, they had lower than anticipated revenue growth, but also the fact that, profitability was hurt a good amount. And when I look at SmileDirectClub, I want to see profitability. I know they have revenue growth. I want to see them get to profitability, and that's going to be a big kind of win for me, in my opinion, when I look at the stock, this company, and what they're doing. Either way, I like what's going on at SmileDirectClub. I think that this earnings report was really blown out of proportion. I think the business fundamentals are still intact, and I totally like what they're doing, and I think they do have a big future. And again, that niche of low-cost dental care. But when it comes to what I'm doing with SmileDirectClub stock and as a percentage of my portfolio, SDC currently makes up just over 5% of my stock market portfolio. So again, not one of my biggest positions, not one of my smallest positions, but definitely in that mid-conviction range when it comes to its allocation in my overall portfolio. I think this is one that if they win, or rather if they manage to get through this period of, again, COVID-19, if they manage to get to profitability, I personally think this is easily a $15 to $20 stock, if not even more. That's my personal opinion. Again, not financial advice. I'm not a financial advisor. I can't tell you to buy or sell a stock. This is all just my opinion and what my thoughts are on this stock moving forward here. So anyways, let me know what you think in the comment section down below, what your thoughts are on SmileDirectClub as a business, as a stock, as a company. Any concerns that you have, I'll be happy to respond to them. And again, I like what they're doing. Only concern right now is profitability, which I hope they do get to within the next couple of years. Anyways, thank you all so much for watching. If you found some value in this video, please consider subscribing, and I'll see you all in the next one. Bye-bye.